My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. This market might actually be at a fulcrum here. Lately, we've seen relentless selling in the large cap technology stocks that had previously led us higher for years, combined with a tremendous infusion of cash into the small cap, largely domestic companies. This rotation's been agonizing for anyone who's stuck with the long-standing winners, including today. But it's nirvana for those who dived into the losers, the worst-performing stocks, the stocks that are buried in the Russell 2000 and the S&P Small Cap 600 index. Today, after a vicious crescendo of selling in the morning, we saw the large cap techs actually try to rebound from the lows, and it boosted the entire market, even if we gave up much of those gains in the afternoon. Dow was able to finish the day up 81 points. S&P dipped 0.51%, and the Nasdaq, filled with software, internet, and semiconductor stocks, once again got ugly, and it shed 0.93%. Sometimes it just comes down to who do you trust. This brutal change in market leadership started on July 11th. We got a cooler than expected consumer price index number for June. Decline in inflation that makes it possible for the Fed to cut rates. Terrific, maybe sooner than we thought. Was that weak inflation number really the cause of the switch, though? I think it started that way. But it's gained momentum during that period where former President Trump seemed like the prohibitive frontrunner in the race for the White House, a moment where he doubled down on his protectionist economic instincts by picking J.D. Vance as his running mate. This GOP tandem is incredibly hostile to companies that move their manufacturing overseas, and they've been adamant about wanting to slap tariffs on any and all imports. Terrible for our international companies and their shareholders. This rotation out of large cap tech and into the small cap went into overdrive 9 days ago, when Bloomberg published an interview in which former President Trump questioned whether it was worth defending Taiwan from China, even though Taiwan manufactures most of our advanced semiconductors, because he believes they stole that business from us, and he doesn't want to give it away, and he doesn't want to protect them unless they pay up. With that, Trump poured gasoline on the large cap bonfire, immolating the king of the tech rally, NVIDIA, because NVIDIA, well, they have all the chips made in Taiwan. Obviously, the presidential race is in a different place now that the Democrats have changed candidates, but this remains a major consideration. Since then, the market's upended the entire leadership cohort, crushing the so-called Magnificent Seven, as Wall Street began to question the future of artificial intelligence, doubting whether all these big data centers are ever going to pay off. I know I'm concerned about our government's policy toward tech. You know that, especially the semis, which are at the heart of accelerated computing and artificial intelligence. Those are the two most important tech themes on Earth. That's why we need to go to the person in the administration who understands the sensitivity of these issues, the person that can articulate where this country is right now on the semis, on Taiwan, and on trade with China, which used to be a major market for American chips, but now seems to be hated by Republicans and, yes, Democrats alike. And that's why I'm thrilled to have Gina Raimondo, she's the U.S. Secretary of Commerce, with us tonight to figure out the lay of the land, the state of play. Secretary Raimondo, welcome back to Mad Money.
Hey, Jim, great to be with you.
All right, Madam Secretary, until 10 days ago, I thought that what could happen in this country is that we would always defend Taiwan as our ally. They may have usurped us when it comes to high-end semis, but it's so important that they be our friend in terms of the military, in terms of what we can do with our supply chains, that it would be difficult to, you don't want to endanger it. And yet I felt that the president, let's say President Trump, really, when he said that Taiwan might have to pay for protection, put that relationship in jeopardy. Did you feel similarly?
You know, look, I know that my boss, President Biden, has been crystal clear on this topic, and I think there's no place to be reckless here or play politics with this. Right now, Jim, you know 93% of our chips come from one company in Taiwan. You just mentioned NVIDIA. Every single AI chip that NVIDIA designs is made in Taiwan. And we need those in our cars, in our phones, in our military equipment. So to be sure, it's time to get serious and have serious solutions to these issues, which is exactly why we passed the CHIPS Act and exactly what we're doing in implementing it.
At the same time, we know that the highest end chips require tremendous foundry capacity for particular specialized businesses. At the same time, we're building, as you said, with the CHIPS Act, lots of foundries here. But can't there be that mixture? Don't we need some in America and some made in Taiwan if we're going to be safe as a nation when it comes to being a military power versus, say, the Chinese?
Yeah, absolutely. But right now it's nearly 100% in Taiwan and 0 in the United States. And that is untenable, unsafe, and makes us vulnerable. So our goal, I've set a goal, Jim, to have 20% of leading edge chips made in this country by the end of the decade. And I hope we also have some made in our allied countries, for example, in Japan. But there will always continue to be production in Taiwan. We have to get out of this place of extreme vulnerability.
Do you think Taiwan stole those jobs, and did they steal the business from our country?
No, those were choices that American business people made. I mean, this didn't happen overnight. You know as well as I did. American businesses were in search of cheap capital and cheap labor and profits. So everything went overseas, China, Taiwan, et cetera, except we wake up now and we find that whether it's chips or critical minerals or components, we're vulnerable. Not everything's about short-term profits. You have to also have national security in your lens, primarily.
If I were running Taiwan Semi and there is a country that is 110 miles away from me and they would like my production run, and I felt that another country, the United States, would not protect me, I would call President Xi and say, listen, we got to make a deal. We got to give you more of our capacity. Isn't that what's at risk here while we figure out how to make as many chips in this country as we can?
Yeah, that is at risk. But what I can tell you is I have had an excellent relationship with the executives at Taiwan Semi. They are, first of all, it's an amazing company. And second of all, they're deeply committed to their investments in the United States. They want to be here. The U.S. leads the world in AI. And so I feel really great about where we are in implementing the President's CHIPS Act.
And you're okay with that recent chip, the H20 NVIDIA chip that's still cleared, right? That's the chip that's going to go to China with your blessing.
I don't know that specific chip, but NVIDIA has been a great partner, and they only ship what we bless.
All right, let's talk about what you've done in the United States. Where are we in terms of the build-out? Where are we in terms of production?
We're steaming ahead, Jim. By the end of this year, we'll have deals done with all the major players, Intel, Samsung, TSMC. I think, TSMC is ready to start having chips come off the line next year. So, as I said, we're right on path, if not ahead of schedule. We're also working on the supply chain. It's not just the factories. It's all the substrate, materials, et cetera. We're working on training. That's the other thing, setting up training partnerships. So we're right on path. And it's an audacious goal to have 20% of the chips made in the U.S. by 2030, but we're going to make it happen.
There are people that I hear from the other party that are critical of the idea that you've anointed industries. I have looked at the people who do the picking and do the choosing and do the working with companies. I'd like you to just fill in the American people. Who is working with you within your team and their backgrounds? Because these are people that I know and I've worked for and worked with and hired, and they're really good.
Yeah, absolutely. By the way, there's no one political on the team, right? So I have someone who was a partner for 25 years at KKR, folks who've come from, Goldman and JP Morgan, Intel, TSMC, project managers from HP and IBM. We've put together a gold star team, totally committed to the mission to get this done. And by the way, we hear from companies. Every single company I've spoken to has said their interaction with our team has been top-notch, professional, and actually help these companies make their plans better.
I have checked with almost everybody. I keep hearing the same terms, 2 words, trusted advisor. Trusted advisor. And we usually don't get that from the government. Now, we have had a change in who's at the top of the ticket. And I'd like to know whether still all systems go for chips, or is it going to be, is there another plan in mind?
All systems go. So the president said last night in his beautiful, honorable address, we got a lot of work to do in the next 6 months. As I said, between now and the end of the year, we're going to sign our deals with all these major companies. And this is a Biden-Harris initiative, and I have absolutely no doubt that a President Harris would continue to be strongly behind this initiative. She's been very involved in this from the beginning, and I have no doubt she'll take it home.
Now, there are two companies that I'm trying to figure out where they stand with you these days. One was Texas Instruments. They were asked on the conference call about where they are with you. And the other is Micron. Micron has spent a fortune in this country and hasn't, and they did it without U.S. dollars. I mean, everyone else moved away. OK, and that did not happen with Sanjay Mehrotra. He was committed to the United States. What do you say to the guys who moved away or are getting a handout now when you had Sanjay just saying, you know what, invented here in the U.S.? Sometimes I feel like that they're not getting a fair shake.
Micron's getting a very fair shake. We have a very generous deal on the table for them. And because of that, tens of billions of dollars, they'll be able to expand in the United States, which is good for America. We need memory made in America. Texas Instruments is a great American company. I talk about Intel as our U.S. chip champion, and they are. So is TI. It's understated, it's under the radar, but it's a great American company. I don't have anything to announce today on that, but we are working closely with them.
Well, I'm trying to get the state of play with China right now. Do you think that we have to do more in this country to teach them a lesson? I know that a lot of the semiconductor capital equipment companies have told me, wow, they keep slapping us down. They keep slapping. We don't know exactly what we can and can't sell to them. When you talk to the KLAs and when you talk to the Lambs, that's a little bit more difficult conversation than it is to talk to one of our American semis. What are the conversations like?
Difficult, exactly as you say, Jim. Look, I never want to deny any American company any revenue, not a penny of revenue. I want them to have the revenue and reinvest the profits in research and development. But sometimes national security, has to take a front seat and profits have to take a back seat. And so they're tough decisions. I try to be surgical about them. I do want to say something. This isn't about teaching China a lesson, not at all. It's about protecting Americans, right? It's about protecting Americans. China will do what it's going to do, and I need to protect the American people.
See, a lot of times I feel like, say, Applied Materials, the intellectual property that they put out is really the guts of technology. And I feel like that they have to be, I don't want to say you have to treat them better, because that sounds like, well, listen, I want to treat your parent and their kids. But these are great American companies, and they are really committed to being great citizens of our country. And sometimes I feel like it's really not their fault, but it just doesn't matter, does it? We have to worry about defense and military and what the Chinese do.
Exactly right. By the way, we love those companies. We do help them. I want to support them in every way that I can, but not at the expense of getting advanced technology into the hands of the Chinese military that they can use against America. That's not in those companies' interest or the interest of their employees or their families.
Okay, dialogue between you and all these great American companies about Vice President Kamala Harris, what it means is she's more pro-business, less business. I'm sure these people give you some scuttlebutt. How are they feeling?
I think they're feeling good. I mean, she is. I've known her for 3.5 years. It's been an honor to work with her. She's energetic. She's brilliant. They know that she will be interested in working with them, listening to them, and most important, she'll bring a stability, which every business leader wants, stability and predictability.
Is it fair to use the word sophisticated? And she's very sophisticated about the ways of Silicon Valley because where she's from, and that makes the dialogue all let's say, worth even more?
Yes. I have worked with her on AI, on broadband. She is sophisticated. She is smart. She grasps the issues, and she's a good listener and learner.
Okay, that's terrific. I'm so glad you came on. I am very concerned about this Taiwan situation, as you know, and you are too. And you're really, well, I don't have to tell you, you're more in the thick of it than anyone in America. That is the U.S. Commerce Secretary, Gina Raimondo. Gina, it's just great to have you on the show. Thank you for calling in. Thank you for coming in, really.
Thanks, Jim.
Appreciate it. Good to see you. Thank you.
Thank you.
All right, you got much more Mad Money. Don't miss my exclusive with the heads of Dow, Hasbro. Plus, I'm sitting down, first interview, Cracker Barrel CEO. Listen, this is a brand new story. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
I on a tumultuous day like this one, to say the least. You might not have noticed when Hasbro, the iconic maker of toys and games, they reported just a dynamite quarter, substantially higher than expected sales alongside a monster 44-cent earnings beat off a 78-cent base. Is not bad, huh? On top of that, management raised their full-year forecast for both the consumer products division and the gaming division, which includes everything from stuff you know, Monopoly to Magic, The Gathering to Dungeons and Dragons, video game licensing. That division was the big driver this quarter. In response, Hasbro stock rallied 3.5% today, but given that it's already up more than 20% for the year, you might be wondering it's got still more room to run. So let's take a closer look. This is exciting. With Chris Cox, he's the CEO of Hasbro, to find out more. Mr. Cox, welcome to Mad Money.
Jim, thanks for having me.
You know, Chris, it's been a long time. We had your predecessor on. He was a great man, did great things. This is a different company from that. So if you don't mind, if you could just give some of our viewers about a look at since the big transformation you've had since 2022, because this is a very different company from many people might be used to.
Well, I think what's the same is we really care about play. We really care about bringing joy to consumers, and we really care about bringing people together. I think the biggest changes you might see is the growth in our gaming business. We have one of the biggest gaming businesses on the planet, whether that's physical games or digital games. We're one of the biggest licensors in entertainment. We're the third biggest licensor in all of entertainment behind only Disney and Warner Brothers. And we're the biggest in digital video games. And we're one of the largest toy companies with literally board games and toys found in almost every home across the U.S.
Now, I think that I mentioned at the office, because I'm a little older than you. I'm not a kidult. I'm sorry. We'll get to that in a second. But I asked people.
Everyone is on the inside.
Well, okay, yes. I'm laughing on the inside about being a kidult. I do think that Monopoly Go is something that I guess I should have known about. Everyone has it. Everyone's downloaded it. When I looked at it, I said, darn, this is really cool. Tell us about what is really $100 million just kind of fell into your lap, but not really, because you had the wisdom to know this was something big.
Yeah, well, we've been in digital licensing for decades. When you think about all the projects that we have in the hopper on digital, there's over 150 that are either active in the market or in development, which I think is a big reason why we're so big in the space. Monopoly Go is the latest collaboration we have with Scopely, which is one of the biggest and best mobile game developers and publishers on the planet. They've done games for us for Scrabble as well as Yahtzee. And Monopoly Go, I think, just really hit a chord with consumers. It's a really fun game. It's a ubiquitous brand. And I think the team at Scopely just did a terrific job really capturing that iconic play that Monopoly is known for.
At the same time, a lot of the big retailers have told me that their toys are really a very bright spot. Now, people know these, and apparently they're selling well. I mean, I'm talking about Furby, G.I. Joe, Play-Doh. These are just iconic brands that keep making money.
Yeah, they're great annuity businesses. You know, the funny thing about toys, the toys that stay the most similar are the ones that tend to do the best over time. The scent of Play-Doh is the same today as when we were kids back in the 70s and 80s.
Well, I have to tell you that when I see some of these brands, and I just think, you know what? I saw Transformers. There's another movie coming out. There's one last year, another business. You just keep making money off the Transformers franchise.
Oh, yeah, that's fantastic. Really, that's the genius of my predecessor. Brian is what set the Transformers franchise apart with the first Transformers movie with Michael Bay and Steven Spielberg. And it's, I think one of the top 7 or 8 blockbuster movie franchises of all time. And literally just like separated that from just a mere kid's toy to truly a blockbuster franchise. All
right, well, give us a little knowledge that you have from more than anyone, I think, in the whole world about Wizards of the Coast, Magic the Gathering, some of these franchises that didn't exist when we were growing up that are now really bread and butter for you guys.
Yeah, well, I'm lucky enough to have been a longtime fan of Wizards products. I started playing D&D when I was a kid, back when I was 10 or 11 at my best friend's house. I started playing Magic when I was in college back in the mid-90s. And this is just a wonderful business. I mean, 40, 50% operating profit margins, huge fan bases, like tens of millions of people around the world, a play system that has literally over 20,000 cards associated with it. and it just keeps growing. It's grown for 14 out of the last 15 years. And just in the last 4 years alone, it's doubled in size. You can't say that about too many brands that have been around for over 35 years.
Most things are down from then, unfortunately, because of 2019. But I do know that one thing that's happened is that people worried about the consumer. I'm not worried. I think we have a frugal, discerning consumer, and I think they think that your products represent great bargains because they're used and used and used, and you do have adults. You age up. These are all things that have changed, haven't they?
Yeah, I think Hasbro is unique inside of the toy space in that 60% of our sales go to consumers over the age of 13. We're really positioned in where play is going, whether it's aged up consumers and collectors, mega games like Magic the Gathering, or increasingly digital, which I think everyone is playing.
Well, I've got to tell you, I think that these things have tremendous gross margins, and we didn't even mention theme parks. And I have to do that because I would partner with you if I were doing a theme park.
Well, you'd have to get in line behind Universal Studios and Merlin Entertainment, but I think we'd be up for the Mad Money theme park.
Well,
just
look,
let us know which brands you want.
I'm part of Universal. Maybe we can make it happen. Who knows? Anyway,
all right, synergies.
Yes, why not? Chris, you've done a fantastic job, and I think it's very early on in the transformation. I want to thank Chris Cox, CEO of Hasbro. Really great to have you on the show.
Thanks, Jim.
Absolutely. Mad Money's back after the break.
Coming up, an old country chain going after a new look. Can Cracker Barrel serve hungry investors? Stick with Cramer.
We do the show for you. Back in May, I answered a question about Cracker Barrel Old Country Store's off-highway restaurant chain, telling you I felt optimistic about the new CEO's turnaround efforts, but also warning you to stay away from the stock because it seemed just destined for a nasty dividend cut. And sure enough, a couple weeks later, Cracker Barrel slashed its dividend by roughly 80%. They had telegraphed it. Stock instantly lost nearly 15% of its value before spending the next 2 months trending lower. By the time it bottomed out about 2 weeks ago, this thing was down more than 30% from where I covered it in early May and down 50% for the year. So keeping your bat on the shoulder has been the right call so far. But what about now? Cracker Barrel's gotten the dividend cut out of the way. We've learned more details about the turnaround plan. I think it's real. It includes a store remodeling program and a menu refresh. Both have to be done. While it could take 2 or 3 years to play out, that's the emphasis. They've got to give them that. You got to give them that time. The story doesn't mean the stock won't rally ahead of time in anticipation of the comeback, especially after this huge pullback. Don't take it from me. Let's go straight to the source. It's very exciting for me. Julie Vecino. She's the new president and CEO of Cracker Barrel Old Country Store. To learn more, Ms. Vecino, welcome to Mad Money.
Thanks for having me, Jim. It's such a pleasure to be here.
Well, it's exciting that you're here because this is iconic. Everyone knows your chain. I have mine on Clinton in New Jersey, 78.
Yeah.
Really good one. And all we know is that we want it preserved, but we also want it fixed. Yeah. Difficult to do both, isn't it?
It is. That's our goal. Our goal is to take what people love about Cracker Barrel and open the aperture a little bit so that more people love Cracker Barrel. So we want to appeal to all generations.
Right. Now, the greatest turn I've seen in restaurants was Panera, where Ron Shaich legendarily said, listen, came on the show. I thought he was going to cry. He said, look, my son said my place is a mosh pit. I can't look at my own place. Redoing everything. I kept begging him to tell me, how's it going? He did a whole new redo. He went to Charlotte. You're doing something similar when it comes to your company.
Yeah. Well, as you mentioned, we're in the beginning phases of our 3-year plan. So fiscal 25, which starts for us in a couple of weeks, is going to be an investment year. And we're investing around a couple of key pillars. So one, as you mentioned, is the remodels. Right. We've got 4 right now in Tennessee. 4 different versions of it because we want to get the algorithm right for our shareholders.
You guys tell people what the algorithm is because they're not all in the game.
Okay. We are spending different levels of money on those remodels to make sure that we can understand what level of investment is going to drive the right return. Yeah. So very, very important. So we've got 4 remodels, and I'm so excited to share that not only are sales and traffic up in all 4 of them, but people are loving them. That is so. Not only are our guests loving them, they're saying things like, lighter, brighter, fresher, feels like my Cracker Barrel. But they're also saying it's still the warm hospitality. It's still the food that I love. The decor is still on the walls. They love it. And our team members love them as well. So we're super optimistic.
So you're going all in Indianapolis.
Oh, yes.
No, I'm allowed to. I checked the notes. So plus, I've done my own work.
Okay,
kind of get that. So I go into a Cracker Barrel.
Yep.
And I still see on my menu
your meatloaf,
or my pie with vanilla ice cream on top, and whether they still have a slice of cheese too.
A slice of, well, you can put cheese on anything. A lot of people add it to their eggs.
Well, I know. It's just that when I went, they always looked at me and said, you could use a slice of cheese. I'm just saying, is it that same kind of like, look, we'll play with it a little. It's
Absolutely.
I always love the fact that they would make the dish for you, even though it's on the menu. They'll still give you that.
We still do that. Absolutely. I mean, one of the things people love to order the most, it doesn't make our operations team happy, but they like plain hash browns. We're known for our hash brown casserole, which is one of our signature delicious items, but we also sell plain hash browns. Not on the menu, but you can get it. So.
Now, you've done some testing of the menu in Texas. Can you give us a sense of how people's tastes have changed? I felt that Cracker Barrel did need to catch up a little bit, not just with this GOP-1 thing, but it's not necessarily known for things that aren't fattening. But you know what? Cheesecake Factory has a lot of stuff that's not fattening. So, I mean, I figure you guys have room.
Well, the menu innovation that we're focused on right now is really about things that we've heard from guests in the research for the last year. So we talked to people who love Cracker Barrel, people who've never been to Cracker Barrel. That's really the foundation of this plan that we put together. How do we make sure that we appeal to people who love us because we want them to keep loving us, but how do we welcome even more people into the brand? So we embarked on the largest menu test in the history of the brand, over 20 items, Jim. So huge shout out to my ops team for learning those items, getting rid of some items, and really welcoming them into the Cracker Barrel family. Some of them are such great successes that we're actually going to go ahead and launch them on August 6th. Company-wide.
Really?
So things like, we've got a delicious chicken and rice, we've got a wonderful savory pot roast dish, and then a signature hash brown casserole, shepherd's pie riff on that hash brown casserole.
Now, do I still want to walk through merchandise and get to it? And that still works, right?
Yes.
You've been able to keep the price points correct. Everything got so inflated in the last 4 years.
Look, one of the things Cracker Barrel is known for is our great value. And all that research that we did to really build the plan, one of the things that resoundingly came back is people said, you actually have great price points. And not only do you have great price points, but we get an abundance of great, delicious quality food for that price point. And that's actually the most important thing to them about Cracker Barrel, is that quantity and quality of food at that great price point.
Now, you've been in your period, we call it a great coaching tree. I mean, you've been at Yum, you've been at Starbucks. These are a restaurant. Yum had a big transformation. I mean, this is a gigantic transformation, and it is going to take time, right? I mean, we are not starting to look for numbers from you in the next 6 months that are going to surprise people.
Yeah. No, we've been really clear, and thanks for bringing that up. It is a 3-year plan. Right. Fiscal 25, which starts for us in another week or two, is really an investment year. We've got 5 pillars in our plan. We're really bringing those together, starting to get those rocking and rolling. And then we'll start to see the benefits in the back half of our fiscal 26 and into 27. So,
how much money do you have to spend on technology? I did think that Cracker Barrel hadn't kept up with a lot of the different things that people started doing about pickup and where
that's
were
a
you
key
there?
pillar in our plan, Jim. Yeah, it's pillar 4. We are really focused on making sure that we're taking the friction out of that to-go experience. About 20% of our business is to-go, and we can be so much better at that. We're working on missing item rates as well as the technology behind that. The other key part of that pillar is our digital and loyalty program, right? And for me, our loyalty program is off to a great start. I'm so excited about that, but I'm also even more excited about how we'll be able to use the data to better market to our guests and really meet their needs.
Okay, you did not have a loyalty program.
We did not. We launched it last September.
How did you stay in business without a loyalty program? I mean, everyone else has got a loyalty. From Starbucks, they got a few people in their loyalty program.
That is a good loyalty program, yeah. But ours is great. No, it hasn't even been a year, and we've got over 5 million people in the program.
That's very good.
Yeah, it really is. And so this is a brand that people love, Jim. I have been so overwhelmed in the last year by how much people love Cracker Barrel. It's so rewarding to work on this brand and to really help usher in the next chapter of growth, because 5 million people signing up in less than a year. We serve almost 200 million guests a year across our 3 day parts. I mean, it is a brand that people love, and I'm so excited to help it grow for the future.
Well, I think they've got the right person, both from execution and enthusiasm, and I'm really thrilled that you came on our show and you brought both.
Well, thanks for having me, Jim.
Absolutely. That's Julie Messino. You're going to be hearing her name many times. She's president and CEO of Cracker Barrel, CBRL. Remember what she said. It's going to take a while. Don't jump the gun. I did that with Panera. Ron Shaich was furious at me. I say give her time. That's how the big money's made. Mad Money is back after the break.
Coming up, investors face headwinds aplenty. Global challenges in focus next.
Today, we got a surprisingly strong gross domestic product number, suggesting that the economy is holding up well, which is not necessarily what we want to see when everybody's hoping that the Fed's going to cut. But I think you get a better sense of the economy from great American industrial companies like Dow, the giant commodity chemical outfit that reported this morning. Dow delivered a top and bottom line miss. Net sales were down a little bit, 4% year over year. But the slight uptick in volume was overwhelmed by weaker pricing. And management's mostly qualitative outlook for the rest of the year, well, it's just say it made me feel that things are sluggish. But here's what did inspire confidence. After Dow's stock dropped roughly 5% at the open, a wave of buyers came in and the darn thing rebounded, finishing the day nearly flat. Now, I'm wondering if all the bad news might be baked into the stock here in the low 50s. Let's check in with Jim Fitterly. He's the chairman and CEO of Dow to get a better sense of this seemingly tough quarter and where the company's headed. Mr. Fitterly, welcome back to Mad Money.
Great to be with you, Jim. Thanks for having me on.
Oh, I'm thrilled to have you, Jim. And one of the things that I thought happened today was that people are beginning to realize, you know what? If the Fed is coming to the rescue and we get cuts, then what you want is a quality industrial that has a very big dividend, and the Dow might be fitting the bill. Is that too pat, or is there more to it, do you think?
Well, I think we've got a lot of positive signs. As you mentioned, volume. We've seen in three of our leading growth businesses, our plastics and specialty packaging business, our silicones business, our industrial solutions business, very solid consecutive growth numbers. It is our third consecutive quarter of year-over-year volume growth. And when you look at the derivatives demand downstream, those numbers are in the 4 to 7% range in those businesses, so that's good. I'd say the biggest drag on the quarter and the miss was on the basis of consumer durables and the housing market, which we know has been slow. And I think we need to see mortgage rates get to something with a 5 handle on them so that we can see people being able to get mortgages and being able to move into that market. When that happens, the part of the business that's slow will pick up pretty quickly, both from construction and then all the knock-on effect from appliances, carpets, and other things that go into the housing market.
Can we get a good read from China from you? Because it seemed like China, I don't know, maybe I'm a little optimistic, but it didn't seem like China's not getting worse with you, maybe getting a little bit better?
Yeah, I'd say for us, China has been good. And in a couple of our businesses, China was up again this quarter. Industrial solutions and coatings both saw strength there. Plastics was a little bit muted because pricing's come off there, so the volumes did not move as much into China. And China's been focused on obviously moving exports out of China, especially electric vehicles, into Europe and into the U.S. and Canada before tariffs take hold. And that kind of clogged up the ports. I think we're working through that. But exports are flowing well from the U.S. Gulf Coast. And, you know, we're very cost advantaged. So we continue to see a strong cost advantage position, high operating rates, and good export markets from the U.S.
All right, for those who aren't that familiar, why don't you talk about what natural gas prices mean and the cost advantage versus the rest of the globe? Because it sure didn't exist when you first got in this business.
Well, natural gas and natural gas liquids are our main feedstock advantage. And when natural gas production is up like it is today, almost 105 BCF a day, more liquids get extracted, and that's the feedstock for us to convert to chemicals. Natural gas has been good. It's been a strong LNG export market because the world needs more reliable power and more reliable electricity, and natural gas is what they turn to. And the United States is a world leader in low-cost natural gas production. Canada also a very advantaged position. When natural gas is low, obviously the frac spreads to get the ethane out are low. And the only thing that's been really causing some slowness there has been Freeport LNG being out due to Hurricane Beryl. But with that being gone, Freeport LNG will come back, and we'll start to see LNG moving around the world.
Jim, you're the leader when it comes to a net zero ethylene cracker in Fort Saskatchewan, things you're trying to do to be able to make it so that we fight global warming. It's been ever since you took the job. Does it matter who's president, or is that just a mission that you feel or your board feels is important regardless of who has the White House?
It's a no regrets move. It's definitely something that's going to continue to be driven by the consumers and by the brand owners. They're responding to the market needs. And the globe is pulling for that change as well. And both sides of the aisle, I think, are looking at how to deal with this issue, but also deal with it in a cost-effective manner. And the way we're doing it with circular hydrogen from our own production and being able to do it at the lowest possible cost makes this an early win for us when we start up in 2027.
Now, I think what you're doing is quite elegant in how you're approaching. At the same time, if I were a shareholder, I said, look, why doesn't he just cut that out and give me a big dividend boost? Because the dividend's been the same. What do you say to a shareholder who says, look, I know I have a bond, but bonds don't raise their coupon, but Dow could?
Yeah, what we're trying to do is bring our mid-cycle and our peak earnings up to the point that we can get into that position to do it. As we spun out from Dow DuPont, our big mantra was cash flow generation and being able to support that large dividend. We need to continue to build that capacity in plastics, get the margins in our silicones business, bring those higher value industrial solutions products to light. And when we bring that floor EBITDA up and bring that mid-cycle from $9 billion up, then that's going to give us the capability to be able to do that dividend raise in the future.
Well, when that happens and the Fed's cutting, your stock will be a rocket ship, I think. You go up very, 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 very quickly. But, Jim, thank you so much for coming on the show. To me, you're being paid to wait for the big turn. Thank you.
Thanks, Jim.
That's Jim Fittolin. He's the chairman and CEO of Dow Inc. It's a very big yield, and if you think the Fed's going to cut and the economy's going to come back and mortgage rates going down, well, I think you get a very big gain. Mad Money's back after the break.
Coming up, you call the shots. A fast-fire lightning round is in the forecast. Next.
It is time. It's over the light round. Let's wrap. Goes on. Say the name of the talk. By Chelsea Search. The course. My staff prepares to play this now. And then the lightning round is over. Are you ready, Ski? Dad, time for the lightning round. Currents about with Joe, New Jersey. Joe.
Hello, Mr. Cramer. Thank you for taking my call. And I like the segment that you did on explaining cyclical and secular stocks. I have them both in my portfolio. Thank you.
Excellent. That's what I want. I want diversity of growth and what it's levered to. How can I help you now, Joe? What's going on?
With Dell off of its recent highs of 180, and with it being a great brand, is it a buy?
Yes, absolutely. I saw the stock today, and I was telling my office that I cannot believe that this thing has given up this many points. It is such a good company, even without most of this AI. So the answer is yes, Joe, you want to buy it. Edna in New York. Edna.
Hi, Mr. Cramer. You say that sometimes we need to take a loss. Is it now time to move on from Five Below?
I am very mystified by Five Below. I don't know what happened there. I know there were many operational problems. CEO leaves. They don't really explain what's going on. And I got to tell you, I think that they rushed open stores until they get their act together. I have nothing good to say about them, other than the fact that they are located in the building where my mom sold hats for Litz. Let's go to Bill in Massachusetts. Bill.
Jimbo, a Boston booyah from your friend up here in the north.
And you are my friend, Bill, and it's glad to have you on the show. How can I help you?
Jim, as a club member, you already prepped us a month ago about what was going to happen here. A healthy 10% correction is very good for the market, I feel, at this point. I don't want to see a dot-com bubble.
No, you're right. You're absolutely right, Bill. We want shakeout. We want people to think it's the easy money to go. We want people to start looking at the alphabets that haven't looked at it in a long time. How can I get us? Give me a stock. Give me a stock.
I got your Toyota, my man.
Look, I don't really want the auto stocks right here. I've got to tell you, they just become way too dicey. Prices are coming down. Let's say no to the autos. And other than GM, which continues to buy back stock, I don't regard Tesla as an auto company anymore. Now I'm just calling it technology, and I like it for tech. Richard in Florida. Richard!
This is Richard from Naples. I'd like your view on CrowdStrike.
I think CrowdStrike's going to bottom here. I think they're 97% through this problem. George Kurtz is doing an admirable job. I don't want to write this company off. Kurtz is too good. There I go. Tom in New York. Tom.
Hey, Jim. Good evening.
Hey, what's going on, Tom?
Hey, Jim. I got a question for you on A10 Networks, ATEN.
Okay, it's network security. If we're going to do network security, I'm still going to say Palo Alto. Now, Palo Alto stock is not even up now since what happened with CrowdStrike, and yet they are chief rivals. That seems wrong to me. I know Sentinel's been the winner so far from that, but I do like Palo Alto. Let's go to Jerry in Illinois. Jerry.
Hello, Jimmy. Hey, love your energy and love the show.
Trying to bring it every day. How can I help?
All right, Jim. Hey, about 15 months ago, my son Nick opened a decent-sized position for us in Dreamfinders Homes, DFH.
Well, it's kind of interesting. It's a single-family home. I like that business very much. No, people really don't know the company. I think your kid's got horse sense. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, how Ford lost its way. Cramer is devastated in Dearborn. Next.
Booyah for the Emperor of Cramerica.
Honorable James J. Cramer.
You got me jumping around my office right now.
Thank you so much for all you do for us.
I enjoy your show and I find it very entertaining and informative.
I watched your first ever episode of Mad Money back in 2005, and I've been watching every single episode ever since.
Don't miss Mad Money every night at 6 p.m. Eastern. Plus, join the CNBC Investing Club and stick with Cramer around the clock.
This business is not about making friends. It's about making money. That's how I feel about the disaster that is Ford Motor, a company I've championed for ages. I'll be the first to admit I got it wrong. I kept thinking that this was a new Ford, one that had put its warranty issues behind it, a Ford that could finally make money on every vehicle they manufacture. And what's happened? As of last night, it's clear that the warranty issues are very much a thing of the present, not the past. Still a major problem. Ford is not making money on every vehicle either. They're being crushed in the EV category. All disappointing. Extremely disappointing. But you know what's really infuriating? Management clearly doesn't believe the stock's worth buying here. And I know that because Ford's not willing to repurchase its own shares. They said on the conference call that there are other things they'd rather put their money into. Oh, I guess it's an expensive stock. Excuse me? If your stock is one of the 5 lowest price-to-earnings ratios in the S&P 500 like Ford, and you don't want to buy it back aggressively, then I don't want to buy it either. In fact, I want to sell it. Sell it for my charitable trust as soon as we're unrestricted, meaning as soon as the rules say we can get rid of the darn thing. I can't hide my disappointment here about what I thought was a cheap stock, but obviously I was wrong because I couldn't have imagined a better investment than the stock at $12. My bad. You might ask yourself, is that too tough? Am I being too tough? No. Let me tell you something. I'm not. I'm not being tough at all. I'm being realistic. I want to make this clear. The problem with Ford is not that they let me down. That's a given. The problem is that I believe them. I trusted them. I wanted to trust. I was hopeful and had nothing to base that hope on because the company, well, they think they're doing well. When management's words don't match up with their actions, you should believe their actions. That I invested in Ford for my charitable trust is an indictment not of them, but it's of me. Which brings me to the concept of culpability. Whenever this charitable trust, the thing I run, owns a stock that's down this big, I ask myself, how the heck did I believe? What was I doing wrong? What were the clues? What did I miss? With Ford, I blew it. And not just because the stock plunged 18%. This is very different from the recent declines of, say, Alphabet or Nvidia. Both those stocks have had very big long-term winners. There have been huge winners for the trust. They're just being hit by a bout of profit-taking of incredible proportions. Nvidia, though, is still the second best performer in the S&P 500, for heaven's sake. Should I have known that Alphabet would sell off on a bad quarter? No, absolutely not. You know why? Because the quarter was actually amazing. It's the rotation that crushed Alphabet. The notion that YouTube was a shortfall is fatuous. It printed a huge number. Sellers just didn't want to see so much money spent on data centers. They didn't want to see so much money going to Nvidia, which is the expensive guts of the data center. But those stocks, they've been roaring for ages. They're winners. They can sell off and I can still hold my head high because they're still huge winning positions for the charitable trust, ones I am proud of and ones that we've taken profits on the way up, locking some big gains. But there's no such vindication for Ford, though. I screwed up. I made the mistake of buying this one, and now I'm mad as hell. I'm not going to take it anymore. Small solace to those who listen to me. And I feel that I should have known better. The answer is, they're right. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you next time.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.